Good afternoon, and yes, it's afternoon. Welcome to Join the Dots. Recording this Wednesday afternoon. A lot's happened in the last 2 days, but then nothing's happened in the last 2 days, has it? Depends on your outlook. If you're a trader, fantastic amounts happened in the last 2 days, and you've either lost a lot or made a lot. If you're on the journey, no change is there. It's just the numbers have come down slightly, but silver's still up 33%. And gold's still up 25% since we started. Have we got an issue? No, it's 3 months. It's not bad, is it? This is why it's so important. When I do these educational videos or informational videos, whatever you want to call them, when I do them, I tried from the very beginning to make sure that everyone who watches them knows it's a journey and knows there are macro issues at play which are absolutely unstoppable. No matter what happens on the daily movements in markets, no matter what the stock market tells you, it doesn't matter, because the macro movements, the macro developments are so stunning and so one way that eventually the markets will follow. All markets, the debt market, the corporate bond markets, the stock markets, the precious metal markets, they will all follow in the end. But there will be bumps in the road like you have in any journey. We've talked about it before. So Monday and Tuesday were quite scary for people who don't understand the journey, and that's why it's so important to understand it. It is so important to understand the journey. Okay. Now, I was going to talk today about 3 or 4 very, very serious issues, but I don't think it's a day to do that. I think you've had the very serious issues. I've told you what they all are. Nothing has changed. Nothing in the market, whether the stock market went up 500 or whether gold went down 300, nothing would have changed other than the 24-hour perception of what's happening. So nothing has changed. In fact, it's got incredibly worse. But let's just talk through one piece, because I did send a piece out yesterday to my clients, and I said, if anyone is still not full in their allocations of gold and silver, today offers a chance to add whilst the market wobbles. And it's just the journey. So if at some point on the journey you're offered a cheaper entry price, take it. Take it. Shadow banking credit contagion is spreading to the banking sector, says JP Morgan. It's interesting, isn't it? Because I talked to you about this the other day, or I think it was the last time we spoke. And I said, they call it shadow banking. Why? Because there's nothing banking about it. It's not banking. It shadows something, but none of them are banks. None of them are insured. None of them are guaranteed by governments. None of them are recognised by banks. None of them are regulated by banks, like banks. So why do they call them shadow banks? Because it gives them some credibility. The word bank says a lot, doesn't it? And yet they're not. They're just shadows. And they're in the shadows. And why are they in the shadows? Because they don't want to be seen, and they don't want to be regulated, and they don't want to be controlled, and they don't want to do things properly. That's why they're shadows. And that's what we're up against now, because every boom you have in any cycle leads to a lot of shadow stuff. Not banks, shadow. Shadow debt. Don't call it credit. Credit is a positive word, isn't it? If you're in credit at the bank, you feel good. If you're in debt, you feel bad. So let's call it what it is, shadow debt. They're not shadow credit companies. It's not private credit, it's private debt. Everything is spun to make you think it's more positive than it is. Marketing. We all live through it. We all know it. We all see adverts for things that are just not true. But if they can get away with it, they will. You see, even if you go to a supermarket, you'll see a cornflakes box that will say 1 kilo, X price. And yet if you look at the 2 500 gram boxes, they're actually cheaper if you buy 2 than one of the big ones. But it says mega deal. People buy it because they don't think. They don't take the time to look at the detail. They just see mega deal. So, straying from gold to cornflakes a bit, but there you go. I'm just trying to show you how important it is to understand the detail, not what you're shown. So we see more on shadow banking. Now that was Manico 64. Yeah, Manico 64. So please try and look at that one. It's called Shadow Banking Credit Contagion Spreading. Let's decipher that. Shadow non-banks debt contagion spreading, because that's the truth. Okay, the contagion, it is spreading. They're not banks and it is debt. Okay, that's the more honest version of it. Then we go on today to Eurodollar University, and as you know, I love Jeff Schneider because he analyses the data and he doesn't get distracted by the noise. Brace yourself is his one today. Oil just sent a terrifying warning to the entire economy. Now, oil is going to be a fantastic signal and you need to watch it. Okay, you need to watch it. There's both politics and there's economics in oil. At the moment, the economics are driving oil down to under $60 a barrel. Okay. Now remember, I told you earlier in an earlier episode, Saudi Arabia needs $92 a barrel to break even, and they're building a however many trillion project called NEOM in the desert, and they need $92 a barrel to break even. It's under 60. What does Trump want? What would Trump want to deliver to the American public more than anything else? I'll tell you what he would like to deliver. Gas under $2 a gallon. That's what he would love to deliver. And that's what they had in his last term. And now he's only just, or the market has only just got gas under $3. And Trump was out there shouting, under $3. We're going to get it to $2. That's what he wants. Now, if he gets it to 2, imagine the deficits it would create in Iran, Russia, Venezuela, 3 of his biggest friends. Okay? It would also hurt the Gulf states, Qatar. Mixed feelings on Qatar because clearly they host some people who aren't all that friendly. So you can see that Trump's target will be to get oil down to 2. So what Jeff's showing here is oil sends a terrifying message. Well, what's it? It's so obvious. It's only telling the world, look, you're using less oil because you're producing less, because people are buying less, because you've got a recession coming. It's not difficult. You've got an almighty recession, could be depression coming. And as we see all these shadow things, they're not banks, as we see all these shadow things starting to shine brightly and warning lights everywhere and sirens going, okay, another 2 banks went, didn't they? 3 banks went in 23. Credit Suisse went in 23. I used to work there. Amazing to see Credit Suisse fail like that. Okay, banks failed. So we're seeing crumbling in the economies. Okay, we're seeing crumbling. Oil is telling us that, and that's why I like Jeff Schneider, because he finds the best signal for you. And the next one he did, that was 2 days ago. Yesterday or this morning it came into me, the repo market just triggered the next round of QE. Yes, it did. I will link this one, and I really would encourage you to watch it. It's quite complicated, it's quite technical. But what it does is it takes you through all the signals that are screaming a repo crisis. When did we have the last repo crisis? And this might ring bells with people. End of 2019. Yes, we had a repo crisis. We had a repo crisis. And the only way they can get out of a situation that creates a repo crisis is QE. It's the only way they can get out of it. They have to print a lot more money. How did they do that at the end of 2019? Well, some sort of flu virus came along, didn't it? And they were allowed to print anything they wanted. Didn't really matter. No one cared. No one gave a damn. They can print what they like. So what you can expect is some sort of event soon which will require QE to be acceptable. Either way, they will be printing trillions. And we know there's a banking crisis, and we know there's shadow somethings that are going to crack. Okay, we know that. We know debt is everywhere. And we know they want to drop rates massively. And we know they might have to, well, we know they're going to have to print money because of the repo crisis. If you watch that episode, I will try and describe it tomorrow, but it's incredibly complicated, technical, and it does take a lot of thought. Okay, but what it tells you is the system is creaking, if not cracking. And that means they are going to have to, whichever way they dress it up, whatever they call it for, whatever they say, you're going to have QE. You're going to have QE. And that means you have more fear and you have more cash chasing fewer safe assets. So we come back to our journey and we come back to gold and silver. Now there will be a lot of comments probably on my site today, Wednesday, saying, oh, you're wrong. And this is the infantile nature of people who can't actually understand more than 10 words and actually understand that we're on a journey. Okay? If you don't understand the journey principle, then sadly you may well be distracted by that camp that tell you that the gold and silver run has come to an end. It has not. When silver moved through 40, and it took 3 goes, normally takes 3 goes to go through a big figure like 40. It took 3 attempts and it finally got through. And I said to everyone, I said, it'll go to 48 very quickly. Won't have a problem. 48, there's nothing in between. And it did. What surprised me was it went through 50 with no problem. And normally 50, and that being an all-time high, would mean it would take 3 or 4 or 5 bounces off 50 before it actually got the momentum to get through. It just sailed through and we hit 54. So for me to see it come back to 48 now, not a surprise at all, because it hasn't had its 3 goes at 50 or 4 goes or even 5 goes. It had 1 and it went straight through. That's not normal. So that was a false break, if you like. It's going to come back. It's got to test it. It's got to weed out the weak ones, and it's got to bring in those people who want the next leg of the journey. And that's where we are. And that's hopefully, if you listen to me, you are on the next leg of the journey now. And yes, it'll come back a little bit, but then off we go. Remember the numbers we're aiming for, please. Remember the numbers we're aiming for, because it's very easy to get distracted in the short term into a sort of loss mode in your mind, because at one stage you were here and now you're here and you think you've lost. You haven't lost because you started down here, and that's how I look at it. Okay? So we made 33% on silver, we made 25% on gold, even after these little retracements. And that's all they are, is retracements, because the journey is to a different place, isn't it? We're looking at gold 8 to 10, we're looking at silver maybe 500 plus, okay? And that's not me saying it, it's people like Manorino, it's other people out there, it's Mike Maloney, okay, it's Andy Maguire. All these people are saying it, and all these people are looking at it and spending their whole life looking at it, okay? Andy Sheckman and others, we know the journey's there. So I'm spending a lot of time on this, and that might sound sort of negative. It's not. It's just to try and reassure those who don't understand how markets work. Markets will often take 3 or 4 times to get through a figure, like a 40 or a 50, and especially when it's an all-time high, a past all-time high. So to get through 50 and blast through to 54 was, in my world, a little bit freaky, and all we're seeing is retracement to 48, and then we'll go off again. Okay, so no problems at all, nothing on, and I've spent 3 months giving you the macro, so that you can understand whatever the noise is in the newspapers, whatever the noise is from the celebrities on the TV, it's irrelevant, because the journey is cast iron. The macro is screaming. Now the oil price is joining in the chorus and saying, we've got a crisis. And when you have a crisis, central banks print money. And it doesn't matter what that crisis is, they print money. Whether it's a virus, whether it's a war, whether it's a recession, they print money, because that's the only thing they can do. They're pretty much useless. If you think about it, as I've said so many times, the Fed, 55 months haven't hit their inflation target. They've still got a job. Why? Why? Anyone else, 55 months, miss your target every month? You'd be out. Why have they still got a job? because they're almost self-appointed. That's going to change as well, and that's going to cause chaos. So an awful lot happening. Please put some comments below, put some questions below. You know me, I try and answer every sensible question. I don't answer stupid traders who've lost some money and want to take it out on me, and that's their problem. I don't do trading, I do journeys, all right? The journey's fine, and the governments now know they've got crises after crises coming, and they're going to have to rescue the economy with a lot more money. X is inverted pyramid, and that money will look for safety, not for risk. Okay, thank you very much.